everybody, and welcome to the weekly Econ podcast, Sense of Security. I'm joined here today with our senior economist of Interactive Brokers, Jose Torres. Hi, Jose.
Hey,
How are
Mary,
you?
Mary McNamara. How are you doing today?
I'm doing great. So tell us about yesterday's Fed cut. It seems that the markets were expecting this cut, but everybody was kind of in the doldrums about a possible no cut in December. Is that true? And
Absolutely. It was a hawkish cut, folks. The Fed came out, gave the 25 basis point reduction, but quelled the enthusiasm that market participants had about additional cuts in future meetings, namely December, Mary. December was trading as high as 90% in terms of odds that it would be a reduction at that meeting as well. Now that's pared back quite a bit, down to around 70% or so. Market participants still expecting a cut in December, but not as sure as they were prior to the Powell presser. Forecast contract enthusiasm related to the Fed day has been through the roof. On Tuesday, October 28th, we marked a new year-to-date high, 3.36 million contracts. We have a lot of different kinds of market participants engaging in our prediction market. We have investors, speculators, hedgers, arbitrageurs, and market makers. I like to group the participants in those 5 buckets. And really, we're seeing a lot of enthusiasm on rate decisions around the world, mainly the Fed. But what's really been driving this week's volume, we're already above 2 million today. Of course, October 28th, we exceeded 3 million, 3.36 million. So we're looking to build on these numbers. If you listen to our earnings call for the third quarter, we mentioned forecast contracts and the significant amount of new instruments that we've added, as well as a number of transactions that have been growing and really in broad-based fashion. When we first got started last year in August, a big, huge boost came from President Trump and Vice President Harris. Now we're very excited to notice that we're seeing broad-based participation across a lot of the other economic indicators that we have. So it's not just elections, economic indicators, government shutdown, fiscal things, national debt. Elections has been really a bread and butter when you consider the record days. It's been elections, but now we're starting to broaden out and we're starting to see a lot of interest in other areas as well.
so also in the news is this Trump Asia trip. So what are the wins and losses? I know rare earths, tariff news, soybeans. What can you tell us?
Yeah, so it was a pretty satisfactory meeting. There was expectations that it would be a positive negotiation because prior to the meeting in South Korea, you had top diplomats from Beijing and from Washington essentially set the framework so that the two heads of states can go and essentially shake hands and agree on some things. China agreed to help more on the fentanyl situation. President Trump decided to reduce the tariff there. That was because he imposed a tariff that was directly linked to fentanyl. So there were some positive conciliatory matters happening there. You also had TikTok was under discussion, allowing China to access more semiconductors under discussion. Soybean purchases are going to be made. Beijing committed to that. But that's one thing where we got to wait and see, because remember in Trump 1.0, Beijing committed to huge purchases of soybeans that didn't necessarily come to fruition at the magnitude that was promised. So generally speaking, that's, those are some of the main takeaways from the meeting. That was part of the reason why today on October 30th, you saw investors buy the dip in the cyclically oriented areas of the market. So the two more cyclically oriented indices out of the 4 majors are the Dow Jones Industrial and the Russell 2000. So all those, the 4 major benchmarks, other 2 being the NASDAQ 100 and S&P 500, all 4 were down sharply in the morning, but then investors bought the dips in the Russell 2000 and the Dow. And that's because of really strong growth expectations. And those companies in those baskets are more levered to the US economy. And when you see that US China is starting to get along and inflation is running at 3%, mainly due to consumer demand being so strong, pushing up services costs, that really widens the path for those kinds of firms to do well. Now, the S&P 500 and NASDAQ 100, they're not recovering today, but recovering into the green, I should say. There has been some dip buying in those two baskets, but not as much as the former two. And artificial intelligence enthusiasm waned today after Meta and Microsoft delivered some results that weren't well received by investors. Wall Street starting to question whether these significant artificial intelligence investments are going to be worth it in the long run. Are these hundreds of billions of dollars going to generate returns later? That's top of mind. So folks decided to trim some technology stuff, but add to the more cyclical sectors like small caps, industrial, materials, etc.
Okay, so that was good about Trump with Xi, but what about South Korea and Japan? Didn't he also go there as well?
So this week there was a big meeting in South Korea. President Trump closed a deal with South Korea a few days ago, and the new Prime Minister of Japan, her framework on politics and on governance and on managing relations between Tokyo and Washington are similar to the late Shinzo Abe,
Mm-hmm.
who served as prime minister while President Trump was serving his first term. Unfortunately, he was assassinated. But Shinzo and Trump were very good friends. They got along really well. Part of the reason why folks say that their friendship was so strong is because Shinzo really courted Trump and was really considerate and gave him gifts and always made sure that the optics were very positive. And now this new prime minister in Japan, she's sort of abiding by those same practices. Golden golf ball, Trump hats, warm ovations upon his arrival. Trump essentially told her, listen, I mean, of course, exaggerating in Trump fashion, but he pretty much told her, listen, whatever you want, you can have. When the President Trump says that, you can that's a signal that relations between the two nations, they aren't terrible. They're doing all right. So, Japanese automobiles are very popular. And President Trump sometimes doesn't like that a lot of the nations where we import cars from, they don't necessarily take our imports, right? Like, you don't see a lot of Chevrolets or a lot of Dodges or Fords in Europe or in Japan, for example. So President Trump is critical of that because he'd like to see more balanced cross-border commerce.
So here's something I thought was interesting yesterday is that Chair Powell stated that he does not believe the AI boom is an asset bubble, akin to the dot-com bubble, as big tech companies have huge cash reserves. But what about the startups? And what was he getting at? What was he trying to tell the markets?
He was trying to calm the markets. This is someone that's traditionally a financier. He worked at Carlyle for a long time. He's right that a lot of those dot-com bubble firms, they weren't very profitable and they didn't have terrific balance sheets. So they couldn't weather the turbulence like these firms can. And that's really the general belief on Wall Street, is that any kind of correction is going to be short-lived, or won't be that significant because these companies actually make a lot of money. And AI is not really the only thing they're doing. These companies have been around for a long time and they have a lot of other goods and services. Now, the question is, however, if artificial intelligence doesn't deliver the returns, how much needs to be given back, in terms of price advancements?
There has to be
Because
some patience, right? I think that's the thing he's trying to suggest a little bit is got to have patience. There's R&D involved here. And it's not going to be just like a next quarter thing. I mean, that just makes common sense, right?
yeah, it's really, really expensive. That's really the worry, is what if this doesn't do anything in the end? What if it's really not that significant? Did we really just spend $100 billion, $200 billion. And the numbers really, they're really up there. So that's ultimately the question.
What's going on with this shutdown? And what are you seeing in the predictive markets about it? And what are you hearing?
It's looking like, I'm just opening up my forecast trader now. It's looking like it's going to continue to extend because both sides aren't necessarily looking to concede to the other. So yeah, looking like before Thanksgiving, because if you look at our November 21st contract, the yes is 72%. So 72% of participants, generally speaking, believe that the shutdown will end by November 21st.
Are people getting a little nervous about the shutdown from an economic perspective? I would seem so because they're not getting some numbers, or is it just more muted?
It's more muted. The Republicans for a long time have wanted to trim government. So in their mind, in the Republicans' mind, it's like, well, they're closed, the government's closed, and everything seems to be working. So why should we have to negotiate with Democrats? The markets are doing great. Generally speaking, I have a little bit of volatility today, post-Fed, October 30th. Bond yields are behaving. Government's closed. In their mind, it's great. And then when you consider that food stamp funding is set to run out in the next few days, that's another vulnerable part of the population.
There is a huge concentration of that in the red states. So I would think they'd be getting a little bit of pressure on that.
They just don't seem like they're going to budge at all at this point. But, we don't really know what's happening behind the scenes.
True.
Of course, there could always, the Republican could be under pressure to make a deal and they're just not reflecting that pressure, but they're just not even talking about it.
So Jose, great. Anything you want to leave us with? What's going on next week? Give us a little heads up on what we want to talk about.
Yeah. So one thing that's new is that ADP is now releasing weekly jobs numbers every Tuesday. So that's going to be fun. So they're looking to really fill that gap of the government not being able to publish data. So the ADP is coming out with their weekly numbers. Of course, we have the weekly economic index from the Dallas Fed. That still comes out every Thursday. Hopefully the government shutdown ends. We have corporate earnings coming up, big corporate earnings today after the bell. We have Amazon reporting as well as Apple. So that'll be big. Yeah, we're going to be watching corporate earnings, real-time economic indicators. We'll be watching interest rates to see what December is looking like. Let's see. So 71% chance that the Fed is going to reduce rates in December. So we'll be watching that closely. And yeah, we're watching geopolitical things and a few other things that I'll remember later.
Sounds good. So Jose, our senior economist at Interactive Brokers, thank you so much.
Thank you, Mary.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Interactive Brokers LLC is a CFTC registered futures commission merchant and a clearing member and affiliate of ForecastX LLC. ForecastX is a CFTC registered designated contract market and derivatives clearing organization. Interactive Brokers LLC provides access to ForecastX forecast contracts for eligible customers. Interactive Brokers LLC does not make recommendations with respect to any products available on its platform, including those offered by ForecastX. Forecast contracts are only available to eligible clients of Interactive Brokers LLC, Interactive Brokers Hong Kong Limited, and Interactive Brokers Singapore Pte. Ltd. Futures, event contracts, and forecast contracts are not suitable for all investors. Before trading these products, please read the CFTC Risk Disclosure. For a copy, visit our Warnings and Disclosures page. Displayed outcome information is based on current market sentiment from ForecastX LLC, an affiliate of IB LLC. Current market sentiment for contracts may be viewed at ForecastX at forecasttrader.interactivebrokers ibkr.com/en/home.php. Note: real-time market sentiment updates are only active during exchange open trading hours. Updates to current market sentiment for overnight activity will be reflected at the open on the next trading day. This information is not intended by IBKR as an opinion or likelihood of a potential outcome.
This is commentary on economic, political, and/or market conditions within the meaning of CFTC Regulation 1.71 and is not meant to provide sufficient information upon which to base a decision to enter into a derivatives transaction.